Peter, good to see you. I really like today's topic, 3 ways to inflation-proof your retirement. I am so tired of talking about inflation, by the way. But of course, it is the most natural enemy of retirement savings. But there are strategies you can put into place to guard your nest egg from spiking consumer prices. And they may even allow you to use those higher costs to your advantage. So first, of course, keep investing. In the long run, the US stock market has tended to outpace inflation.
Yeah, and unfortunately, Erin, I think we're going to continue talking about this for quite some time. In
I
fact, the
know. Yeah.
duration of forever and ever. Inflation is going to continue to be a factor as long as they are creating and printing money, which usually is one of the bigger causes when that happens on a pace that is greater than normal. And yes, investing is one of the critical components to help combat inflation. However, they usually don't happen at the same time, meaning in periods where we are seeing higher than normal inflation, the stock market usually doesn't react favorably during that time. In 2022, when we were seeing really inflation running rampant and everybody was starting to notice all of these significantly higher costs and prices, the stock market reaction was
Right.
negative. We had one of
Right.
the worst years in stock market history, specifically in fixed uh, in income bonds and bond funds on that side of the equation. Similarly, in the late 1970s and early 80s, we had a very kind of similar atmosphere for inflation and the stock market reaction. We had very high inflation. They raised interest rates, and the corresponding movement of the market, we went into a pretty deep recession and a downward market for that period. So in summing that up, it is often a natural reaction for people during those high inflation periods where the market is volatile to say, hold up, I'm losing money too. I can't take this risk. I can't take the losses and then stop investing. We shouldn't do that because the market has not only always come back, it has always surpassed previous highs over history. And
Mhm.
so over time, not right in that exact moment, but over time, the market really has been the best financial vehicle to continue to grow our money above and beyond the average historic inflation rate. So it may seem like a double whammy right in the moment, but you got to keep your head down and continue to invest, especially dollar cost averaging. If you are continuing to put money in, not only don't pull the money out, but continue putting money in because then you're buying on sale. You're buying cheaper prices, and those dollars are the ones that grow even more than the other dollars that had already been in your investments in the first place.
Mhm. Next, of course, maximize your Social Security, which is easier said than done, though, Peter.
Yeah, and we've got to try to make the most of it. We have a Social Security software helps people analyze and optimize their Social Security. You know, the difference in one decision versus another over the course of a lifespan in retirement can be, especially in the case of like married couples, several hundreds of thousands of dollars in
Wow.
Social Security income alone. And those are dollars that are either going to come from Social Security or going to come from your personal investments, your assets, or simply not be there at all, right? And I know which one I would prefer. I would prefer to get them from what we're entitled from Social Security. We've put that money in, so try to make the most of that. Plus, Social Security does receive those cost of living adjustments, which is an important component. Usually doesn't account for all of or offset all of inflation because Social Security usually is not all of somebody's income need, but those cost of living adjustments certainly are helpful.
I'm glad you brought that up because the COLA, of course, does reflect the current inflation rate. And Peter, I think a lot of people assume that, oh, right, well, the COLA just went up, so I should claim now, so I take advantage of that. But that's a misconception.
It is a very common misconception that, hey, if we're not in the Social Security collecting phase, that we miss out on the cost of living
Right,
adjustment.
right.
Social Security is inflation adjusted across the board. And actually, what a lot of people don't realize is that the salaries that go into calculating the Social Security amount that you will receive are also inflation adjusted. Those earnings history numbers from way back in 1980 something that looks so small compared to what you're earning today, well, those numbers actually get inflation adjusted as they go into the equation for how much you will receive. So even some of those early earning years might account for a significant contribution to the Social Security you're going to receive eventually once you claim, and you do not miss out on the cost of living adjustment if you have not yet made the claiming decision. So don't hear about a larger than normal COLA and then rush out to claim and collect Social Security thinking you're going to miss out on that. Your numbers will also, the future projected numbers for what you will receive will also be adjusted by that COLA amount plus any earnings that you are doing in those additional years of working.
Yeah, glad we got to clarify that. And last, of course, rethink your expenses. Put simply, save more money, right? But this may sound simple, but this advice, Peter, as you know, often requires the most coaching.
Yeah, I mean, I hate telling people to not spend money or to continue working longer, but I also will never say that that's going to be bad. Either one of those are going to be bad for your financial outlook
Hmm.
on life and retirement, right? So it's a balance because we have to live today, we have to enjoy today, we got to do the things that we want to do, but we also want to continue to be able to do the things that we want to do for all the years of our life, every day into the future. And some of that at times can take some financial discipline, at least controlling our expenses, right? Going to the grocery store is one of the most painful things for people these days because of the high cost of groceries. And we might not notice how expensive the alternative is going out to eat because it's just one meal, right? We look at the cart of groceries and we're like $350, $400. Oh my goodness. But that covers a week's worth or more of meals for the family, whereas going out to eat once is $100, $120, but
Yep.
that's only that one meal. So,
Yeah.
maybe not going out to eat quite as much isn't really as fun, but cooking together and preparing those meals in the house is time together, it's experience. It can be fun together and it can save a little bit of money. And it's not just the groceries, right? I'm just giving that as one example, but shopping insurance premiums on a pretty regular basis, anything where you are a long-term customer, oftentimes, unfortunately, companies don't give the best prices to their existing customers. I've never understood it, but if you go and shop around things periodically, oftentimes we can find savings even in the subsistence level line items of the necessary budget. And then, of course, one of the biggest expenses that we have is lifestyle, those things that are not obligations, but that we want to do. And sometimes we can find ways to cut some costs there as well. And certainly that is going to be an area that helps us to address this big factor of inflation, Erin.
Of course. Well,
Yep.
Peter, if somebody would like your help with any of those strategies, what's the best way to reach you?
Give us a call at Richon Planning, 919-300-5886, 919-300-5886. I'll wrap up, Erin, by saying that one of the best ways to combat inflation is to leverage each and every dollar in our retirement investment accounts to create as much income from them throughout retirement as possible. And because of these high interest rates, because of the same factors that we are continuing to have to talk about inflation involving, it is a great time to look at that. The cash flow rates, the payout rates, the income rates that you can generate from your savings are also significantly
Hmm.
higher than they have
Hmm.
been historically. So
Hmm.
if you want to look at the best way to fight inflation, it's get the most out of those retirement accounts. And now's a great time to look at that.
Great. All right. Well, again, Peter, thanks so much for your time today. I appreciate it.
Thank you, Erin. Yeah, give us a call at Richon Planning, 919-300-5886. We always appreciate it, Erin. Hey everyone, Peter Richon here. Hope you enjoy the content. As always, make sure that you like, subscribe, share the videos with others that may find this information helpful. And as always, you're welcome to be in touch or to submit questions or comments. You can comment below the video anything that you'd like to see or hear shared on our YouTube channel and in future videos. If you got a topic that you've been thinking about or is of concern for you financially, be sure to let us know. We'd love to help you by discussing it on the channel. So appreciate the continued views and the likes and the subscribes, the shares, the comments, always helpful. We look forward to getting you the information that you need.
This has been Planning Matters Radio.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.